The price of the US dollar continues to fall amid the publication of a new macroeconomic data. For example, yesterday's very weak report on the job openings caused a drop in the US dollar index by another 0.5%. The issue is not such much in the figures themselves, but in their potential influence on the Fed Reserve's decision that will be taken at the meeting scheduled for next week. For instance, the markets are now considering an initial easing of 50 basis points. In a total, forecast for the 3 remaining meetings this year suggests a cut of 125 points. Just last week, these figures were seen as 25 and 100 points, respectively. So, there is no doubt that the data to be released this Friday will trigger a real storm of volatility in the major currency pairs. You're watching Traders Calendar. However, the market is not solely driven by the US dollar. Traders show a great interest in the main currency pair, which is also influenced by the economic situation in the Eurozone. On a Friday, there will be a lot of information that will shape the pair's movement. For example, Germany will publish its trade balance data, and this economic indicator remains in surplus, meaning there is a positive difference between imports and exports. However, export figures look too small. Thus, the previous report unveiled a slump to minus 3.4% year-on-year. Therefore, even the slightest increase in sales, along with the trade balance itself, will support the euro. It seems that there will be no miracle in the German economy. At least forecasts for Germany's industrial production are pessimistic, and this indicator's growth is expected to slow sharply on a monthly basis. That's in June 2024, industrial production expanded by 1.4%, but in July it may drop to minus 0.3%. Therefore, the euro should brace for another decline if the predictions come true. Just a few hours later, the main currency pair will be ready to rise again, and this time amid the release of the Eurozone GDP figures. However, the increase is expected to be very small, just 0.1%. As a result, the indicator may reach about 0.6%. Even such an insignificant change could bring hope for the Eurozone and its single currency, perhaps against the backdrop of an anxious anticipation of the US NONFARM payrolls. The euro-dollar pair will react to the release of the employment report in the Eurozone. Job growth may fall below the previous 1% level, so the euro may also inch down. However, once the US issues its NONFARM payroll data, traders will shift their attention to the forecast for a rate cut by the Fed Reserve. A recent revision found an excess of around 818,000 jobs for the year ending in March. That's why the August report should have shown a drop. However, analysts suppose that the US economy added 160,000 new jobs in the given period. So, compared to July's increase of about 114,000, this jump will seem truly revolutionary. It will immediately bring back the possibility of a quarter-point rate cut by the Fed Reserve. Such a change will act as a bullish signal for the US dollar. In fact, the main indicator for the US Central Bank is not so much job growth as the unemployment rate. Let us not forget that the US will hold a presidential election in November. The ruling Democratic Party will hardly encourage people to vote for it because of such unemployment in the country. In the previous period, the unemployment rate climbed to 4.3%. Therefore, the anticipated drop of 0.1% will bring relief to the US authorities and boost the US dollar. We also recommend paying attention to the average earnings. The indicator is likely to reach 3.7%. Notably, the Fed Reserve also takes this indicator into account when making a key rate decision. Against this backdrop, the greenback may gain in value. Please note that the time of publications is set in a GMT +3. The next video review of our traders calendar will be released on a Monday, September 9. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.